Good morning, everyone. This is Paul and Kelly with Powerhouse Realty Group. Today we're shooting down at Burlington's beautiful Spencer Smith Park.
And today we have our special guest, Glenn MacLaren from Tribe Financial, who's going to go over the very important question we all need to know: what is a trigger rate and trigger point? Welcome, Glenn.
Thank you for having me.
No problem. Thanks for coming. Appreciate it.
Yeah.
So just recently, I read an article, Glenn, that one of the big banks has 80,000 mortgages that are, I don't want to say set to or are scheduled to, but they will potentially be affected by the upcoming Bank of Canada's interest rate. What exactly is this article referring to, and how does it affect those that have a fixed variable mortgage?
Yeah, that's a great comment, Paul. There's been a lot of talk about rates and specifically variable rate mortgages with this rising market we've seen. So today we wanted to just talk a little bit about variable rate mortgages, and even more specifically, variable rate mortgages with static mortgage payments, which is when the payment does not change as interest rates are fluctuating. So what that article is alluding to is what we call the trigger rate. I'm sure a lot of you are kind of wondering what the trigger rate is and how that may affect you personally with your own variable rate mortgage. So just to know, this is only pertaining to those of you with a variable rate mortgage where your payment does not change.
Right.
So keep listening if that's the case, or just keep listening anyway.
Yeah.
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 So, trigger rate. Trigger rate is the rate at which your payment, which hasn't been fluctuating, is no longer big enough to cover the interest cost. So, as an example, if the payment was $500 and the interest cost is now creeping over $500, that is what we call the trigger rate. Lenders won't, there's a lot of people who think at trigger rate, lenders are going to automatically change your mortgage payment. That is not the case. They are going to advise you of any rate changes, and they will also advise you that maybe it's a good idea, it's financially prudent to increase your payment,
Right.
but it's not absolutely necessary. Yes, I agree, it's a good idea, but in this crazy market, maybe you're not in a financial position to be able to do so. But what we want to make sure of, and the second point that you mentioned, is trigger point. The trigger point is where this deferred interest, so in that example, $500 payment, let's say the interest cost has creeped up to $600 is the interest cost. That $100 is accumulating back on your balance. So the trigger point,
Your mortgage is growing.
yes,
Yeah.
your mortgage is growing, exactly. So the trigger point is the point at which your mortgage balance is growing to the point of your original approval. So Kelly, if your mortgage is $500,000 and with this deferred interest rate, it has grown from back, you paid it down to $450 and now it's grown back to $500,000. This is the trigger point, and this is where lenders will request a call to action with your mortgage, either increasing your payments, lump sum payments, doing something to right that ship and reset the amortization.
Right.
Yeah.
of your mortgage.
Would a possibility also be locking into a fixed mortgage? Is that something else that at that point somebody could do?
Yes.
Not
Yeah.
obviously advisable necessarily, but it is an option.
Yes. Whether or not it's advisable for you will be up to a good conversation based on your own personal financial situation. But locking into a fixed rate is going to do exactly what the bank wants to do. It's going to reset recalibrate your amortization. So, as an example, you bought the house, Paul. It's started at a 25-year. It's been paid down to 23 years, but because of interest rates, it's been kind of creeping up again, right?
Right.
Yeah.
When you lock into a fixed rate, they're going to move it back to what it should be, which is
Adjusted
the
to original
23-year.
contracted. Right.
Absolutely.
Yeah.
So,
Right.
locking your fixed rate payment is an option, but just know it will adjust your payment accordingly to reset it back at the contract amortization.
Awesome. Great.
Yeah.
So I guess if anybody out there has a static or a fixed variable rate mortgage and you have some questions, this isn't really being talked about a whole lot, so it's something new for a lot of us. If you have any questions, you can reach out to obviously Kelly or I or Glenn MacLaren from Tribe Financial. We'll have all the contact details down below, and we look forward to any of your questions. Take care, everybody. Have a great day.
Thank you. Take care.